Everybody. For those of you who are new in my webinar, I basically conduct webinar at least minimum once a month, and depending on the subject matter, I would try to choose a subject that's relevant and most importantly is it's going to be helpful to all investor and trader. The good news is tonight I'm going to talk about, as part of the webinar, one of the greatest or the hottest trading in town. And probably you will know about it. I will not tell you what's the hottest instrument trading in town, but we'll keep it a mystery for time being. So welcome to my webinar today. The subject matter is price action trading. Okay, a little bit about why I pursue my interest in trading. And I'm also the author of several books. One of those books is called The 8 Candlestick Patterns. This is a very, very basic introduction to understanding candlestick. And for many people who doesn't have a formal training in technical analysis, so 8 Candlestick is probably the best book to read. It's only about less than 100 pages. It's very easy to read, and I try to compress all the important candlesticks into this book. For those seasoned traders, I've written this book called Trading Naked, Make Money Trading Price Pattern. It is actually for intermediate traders who wants to advance their trading skill to read the market better. So Trading Naked is actually a book that I teach for Trading Naked's webinar. And finally, for the professional traders, I've written this book called Price Driven Trading. This is actually a very, very advanced book that I use to teach as part of the professional trading. So this book is actually written in the past for me to help to train all the professional traders. Okay, just give me a bit to give you a bit of my background. I'm actually economist by training, right? But I spend all my time in banking. While I work for all the three biggest banks, Citibank, American Express, and Standard Chartered Bank. And of course, I spent a couple of years in Central Bank. My interest is actually in the area of investing and trading. Okay, so I actually has been trading and investing for almost 20 years. My passion is actually in terms of education as well, right? So let me say that I approaching this webinar from a point of view as a private trader. There's a lot of difference between a private trader and institutional traders or hedge fund traders. The main difference is a private trader trades on his own money, whereas the institutional traders or the hedge fund traders, they trade on OPM, other people's money. So there's a world of difference. Okay, just remember that whatever I presented today is actually copyright reserved. Of course, you can write down, right? A word about disclaimer. Tonight webinar is purely for education. I'm in no position to give you financial advice or investment advice. And whenever you are investing or trading, just remember there's a tremendous loss involved in investing or traders. So if you're trading equities, futures, currencies, and option, you probably know that you can incur huge losses if you do not pay particular attention to money or risk management. Okay, so with that disclaimer, let me come to the webinar proper and ask you this fundamental question. How do you trade this market? Okay, so assuming that this is the market that you are very familiar, or this is a market that you have been trading before. So for some of you, you have been trading. So perhaps you can tell me how you can trade this market. Okay, now this is a very typical market, as you can see. The market actually started off on a very gradual uptrend. Okay, and after that, because of the start of the COVID-19 pandemic, the market went into a terrible dive. Okay, so that's around about March last year. Okay, so that was a major correction. Okay, and I remember trading this period. A couple of days, I will have two lockdown. Right? Okay, or what we call circuit breaker. So in other words, the system actually breaks twice in a day when I trade. Just imagine the amount of selling was tremendous. Okay, right. So that was like somewhere in 8th of March. Okay, and then after that, you notice that the market actually went and reversed. Okay, a very strong market rebounds. Okay, in fact, right now you already surplus. Okay, the high of the previous cycle. Okay, so now the market is here. Okay, right. Uh, so so for those you have been trading, you know that even though if it's a bull run, the market doesn't go in a straight line. So the market goes something like that. Okay, right. So now we are here. Okay, so this is a very interesting uh, stage of the market because the market will not behave like this. Okay, right. So the market is pretty choppy now. Okay, and it is a market that unless you have the expertise and the skill, is very hard to trade this market. So by the way, I entertain any question that you have at the end of the webinar. Okay. Okay, let's look at another market. Okay. As you can see, this market is very much different from the previous market. Okay, right. So as you can see here, right, the market make a high here. Okay, right, and after that, the market went into a correction, a minor correction. Okay, it breaks here, it form another sideways market before it breaks. Okay, and you notice that right now the market is actually also in a sideways. Okay, right. So as compared to the previous market, so this is a much more difficult market to trade. Okay, right. So that's the reason why I always ask this question: do you know the market that you're trading? Okay, it's very, very important. Okay, so you should be choosing the market that you really know how to trade. Okay, let's look at another market, right? Again, this is a different market from the previous two markets, right? Okay. Okay, the market actually went into what we call a very interesting sideway before it breaks. Okay. And after when it breaks, it forms another congestion zone before it breaks. Okay. And that is a pinnacle or the peak of the market, as you call it. And the market actually corrects. Okay. So as you can see, this is a, a very much different market from the previous two market. Again, this is not an easy market to trade, right? Because the market actually doesn't behave in a strong trend, huh? Okay, right? So this market actually breaks and it went into a sideway, right? For those who've been trading, uh, you know that the sideway market is the most difficult market to trade, and it really doesn't have the skill and the expertise. I would not suggest that you trade this sort of market, right? And this sort of market. Okay. Okay. If I show you this market, then I think quite a number of you were able to tell me how you trade the market. Okay. Right. This is what I call a typical way that most traders will trade. Okay. So they have what we call a price action chart here. Okay. And then they superimpose indicator below. This is a MACD, and they impose another indicator below, right? Okay. So with the price action, that's one. So they use the MACD and the RVI to help them to trade. Okay, for example, okay, so this would be the indicator of the market being oversold, right? So you can see that this being an oversold market, right? So they will sell. Okay, the indicator went down, right? Okay, and over here, uh, okay, so this is this will be the bottom, okay, right? So this is overbought, this oversold, market went up, okay, right? So this is a way that most people will be trading, okay, with the help of two indicators or oscillators. So I'm not sure some of you are trading this way, right? Okay, I'm going to show you a typical market that most mechanical traders are using. So most mechanical traders will trade this way. So I will explain what is mechanical traders, okay, right? But for time being, let's accept that these are mechanical traders and they trade, okay, with a Bollinger Bands, okay. By the way, I'm not sure how many of you actually trading with a Bollinger Bands, but Bollinger Bands are very popular way that most traders use to trade. And as you know, Bollinger Band is one standard deviation, okay. This is one standard deviation from the mean, okay. And as I explained, um, most Mechanical traders will use a MACD, oscillators, RVI, and a stochastic. Okay, so most mechanical traders, they will use 1, 2, 3 indicators, oscillator to help them to trade. Okay, besides using Bollinger Bands to superimpose on the candlestick chart. If you ask me, I really don't know how to trade this stuff this way, because I'm not a mechanical trader. So, but I know many mechanical traders, they trade this way, right? So today I'm going to talk about a more radical, more refreshing way to trade the market by just using price action. So many of you actually coming tonight to really understand how to trade the non-mechanical way, okay, which is what I call price action trading. Let's turn our attention to how professional traders trade the market. Okay, number one, most professional traders trade using multiple time frame view of the market. Okay, so this is what we call uh, the big picture. Okay, so this is a big picture of the market, right? So when I call a big picture of the market, we are looking at a higher time frame. This could be a daily chart, or this could be a weekly chart, or this could be a monthly chart. Okay, how you choose whether daily, weekly really depend on the style of the trading. Okay, so your style of trading will determine what sort of time frame you select. And the second time frame most professional trader will use will be one level below the first level of the time frame. So for example, if this is a daily chart, then this could be a 60-minute chart. Okay, right? So it's a one time frame, two time frame. Okay, and then finally we have the third time frame. This could be a 5-minute chart. Okay, uh, so for some of you, 5 minutes could be too fast. So you probably can select a 15-minute. Okay, right? So you have three time frame to look at the market. Okay, and from a professional trading standpoint, looking at three time frame will be a more helpful way to look at the market. And not only is it helpful, but it's also a more optimal way to enter the market. Okay, let's turn our attention to just looking at the market from a price pattern standpoint. Okay, so this is what I mean when I say price action trading. So you have a candlestick chart here. There's nothing in this candlestick chart. Okay, there's no Bollinger Band, there's no oscillators, there's no indicators. It's just pure candlesticks. Okay, right. So this is what I call a pure price action trading. In other words, all I need to do is to understand what each candle tells me. Okay, for example, this candle. Okay, now this is a very powerful bearish candle. Okay, same as this one here, same as this one here, same as this one here. Okay, right. Uh, so this tree is a very powerful bullish candle. Okay, so by just understanding what each candle or a group of candles tells you, you're able to understand the market. And if you're understanding the market, then you know how to trade the market. Okay, so this is a very interesting market. Okay, okay, so you'll notice that the market makes a higher high. Okay, so therefore this is a uptrend or bullish market. Okay, so this is an uptrend. Okay, and then because of this signal here, okay. By the way, this is a bearish engulfing candle. So this signal give you the clue that the market actually reversed, and the market did reverse, right? Okay. This is a confirmation that the market actually reversed. You can look at this candle here, okay, right? So the market went all the way down, okay. Uh, Test this level, failed, and then the market went down. So the market actually went up and then reversed all the way down, okay. So what I'm trying to tell you is that by just understanding price pattern, you're able to trade the market. You do not need any indicators, oscillators, for that matter, to really understand how to trade the market. Okay, so that's what I explained just now using price action trading. Okay, right. So the market went up, reverse, okay, reverse, and the market turned down. Okay, right. So this is a point that you enter the market. Okay, this is a point. Okay, right. So there are certain setup, certain rules that you follow, right, to trade the market. So tonight I'll be talking more in terms of this stock market. Okay. So let me summarize what I was talking about. Okay. You have to understand the market you're trading. That's very important. If you don't understand the market you're trading, please don't trade the market because you'll be on the losing side. Okay. So what I'm showing you is basically S&P market, but with three different time frames of trading. Okay, right? So if you choose a wrong time frame, right, then obviously you have to trade differently. Okay. So market can go up, okay, it can go down or go sideways as you have seen just now. Okay. Choosing the market to trade is so important to your bottom line. So in other words, if you choose even the same market but you choose a different time frame, okay, then you'll notice that it's very hard to trade. Okay. So the rule of trading is the lower the time frame, the more difficult it is for you to trade. So you should be choosing a time frame that's number one, suitable for you to trade. You understand how to trade, and more importantly, is you can trade well. Okay, I told you in the beginning that tonight I'm going to spend some time talking about the hottest instrument of trading in town. Okay, so this is the business time report today. Okay, Bitcoin falls as much as 15% after a shock U-turn on Tesla car payment. So that's a headline. Okay, and look at that. Bitcoin recoups some losses after tumble, triggered by Elon Musk's comment. Right. So the thing is, if you are trading on a very hot instrument like Bitcoin, the moment somebody make a remark like like Mr. Mark, okay, he make a U-turn, right, to say that, oh, now you cannot use Bitcoin to buy a Tesla car. So with that comment, you find that uh, Bitcoin actually fall more than 15%. Okay. Okay, so that's basically the Bitcoin market. Okay, right. So how to trade this market? Very, very interesting. Okay. So you notice that Bitcoin behave like that. Okay. So that was really the peak of Bitcoin, right? So that was the previous bottom. Okay. So the price went down here. There's a support level. Okay. It, it make a V-shaped recovery. Okay. Retrace to this level. Okay. Before the market went all the way up. So something like, if I remember correctly, it was like 70,000. Okay. Right. And then after that, you see this candlestick here. Okay. This candlestick, okay, is a reversal candlestick. Okay. Right. Strong reversal. Right. So that was a signal for you to, instead of buy, you sell, went all the way down. Right. Look at this candlestick. Very strong signal for bearish candle. Went all the way down. Okay. Now. And then look at this candlestick here. Okay. Now. Right. This is a what we call a bullish engulfing candle. Okay. Engulf this candle. Okay. It indicates the market reverse. Right. Went all the way here. Okay. Now. Cannot break this resistance zone. The market went here. Okay. Now. So now the market is somewhere in this level. Okay. Right. So what I'm trying to tell you is, without using Bollinger Bands, without using stochastic, without using RSI, MACD, you can actually trade the market, and you can trade the market pretty well, because what you need to focus on is nothing more than price action. Okay. So that is a way to trade Bitcoin. Okay. Right. Using pure price action trading. Okay. The way I teach how to trade a market like Bitcoin using price action is this. Okay. So first you got to understand the structure of the market. Okay, the structure. Okay. So once you understand the structure, you really know how to trade. Okay. That's it. Okay. Right. So in other words, the structure give you an idea where would be the limits that the market actually went. Okay. So now the market is here. You know. So this is a typical example of what I call a sideways market. This is a trending market. This is a trending market. Okay. So you can trade here very well. You can trade here very well. But once when the market goes here, it is very difficult to trade unless you got the knowledge and the expertise and the skill. Okay. So now you notice that Bitcoin is not easy to trade as compared to a few weeks ago. But of course, you can trade if you understand how to trade using price action. Okay. Okay. Right. So the way I teach about price action is you got to understand where the market uh, congregates or congested together. Okay, so the way to do it is really to understand that this market went into a rectangle, triangle, or rectangle patterns. Okay, so with a rectangle patterns, what can happen is, okay, okay. So the only way to trade this market is if there's a breakout. Okay, so the breakout can be this breakout here. Okay, this will be a more likely breakout than over here, right? Why? Because you understand that the market actually gave you the understanding that this was a bearish move. Okay, no? Right. So one of the most important understanding of market, if the market is making this bearish move, so you should expect a parallel move of the market. Okay, so that is why the breakout on the downside is a high probability than on the upside. Okay, uh, so this is some of the rules of trading. Okay, so there you are. Okay, the market went uh, into a congestion zone. Okay, breaks on the downside. Okay, so once when the market breaks on the downside, it's going to test. It's going to test this zone. Okay, this support zone. Okay, and most of the time it will fail to penetrate this zone. And what happened? The market reversed up again. Okay, that's what is happening to Bitcoin lately. Yeah. Okay, so Bitcoin crashed all the way, and it's find a support here. It will correct. Okay, it will retrace. Okay, let me try to say that understanding the market you're trading is so important. Okay, and this is something that uh, you have to acquire the skill of trading the market. Okay, so the question you got asked is, what is a methodology you select to trade? So you got to have a methodology to trade in a trending market. If you want to trade the sideways market, then you also need to have a methodology to trade the congested market or the sideways market. The next question is, how can you be successful in a methodology? So in other words, if you have a method to trade, how can you be sure that this methodology can be successful? Okay. Uh, I just want to show you, okay, for some of you who might want to understand how I trade and what's the outcome of my trading. Okay. So as you can see, I'm a pure price action trading. Okay. So if you look at a typical trading records, you'll notice that uh, this is a this is the most important chart. Okay, this is what I call the equity chart. Okay, it plots the time and your profits. Okay, right. So if you know how to trade, then the equity chart should be something like this. So ideally, your equity chart will start with some level and goes all the way. Okay. Uh, so if you look at this my equity chart, you notice that I've traded. Okay, I done something like for the month of March, 26 trade, okay, 13 consecutive win, one consecutive loss. Okay now. Okay. And the most important in trading is actually this figure here. Okay, this figure. Okay. Uh, for some of you, okay, who might not be aware, this is the most important indicator of your trading expected return. Okay, right. So how well you trade, how badly you trade is indicated by this ratio here, ER. Okay, right. Okay, so that's my ER for the month for the month of March. So in my workshop, okay, or my seminar, I will teach you how to compute what is this ER. Okay, now for some of you, it doesn't make any sense. What is a ER? But for professional traders, institutional traders, we measure your result by this figure here. Okay, right. So this figure is really the understanding of how well you trade. Okay. Okay. So let me share with you my April result. As you can see, my ER is fantastic. So I did very well in April. You can see that this ER curve, okay, what does it show? Okay, it shows that I've done 29 trades, no losses, right? 29 trades. So that's the reason you look at this equity curve. Okay, it went from here to here. Okay, so as I said, this is a very important figure. My ER here. Okay, now. So when I ask professional traders, the first question I ask is, "What's your ER for the month?" Okay, now. Okay. So as I said, for the month of April, right? Uh, there's no losing trades. Okay. Okay. So with that understanding about the markets, understanding about how you approach the market, understanding the importance of why you have to choose the market that you can trade. So 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 let me try to explain what's the objective of tonight's webinar. Okay, now. Tonight's webinar, as I said, is about price action trading. The key challenges in price action is really this. For some of you who are not familiar with price action trading, what is price action trading? I think that's what some of you are interested. Why you must learn and apply price action trading? When can you be proficient and successful in price action trading? Who should trade with price action trading? So I think uh, this four important question is very important for people who are not familiar with price action trading. And then finally, for those of you who are really interested in price action trading, then the key thing is, how do I learn and trade successfully with price action trading? So that was the workshop that Thomas was talking to you about just now, which I normally conduct like once or twice a year. Okay, and the good thing about my program is every program that conduct, it is based on specific material, specific information that I provide to the students. Okay, and for price action trading, you'll get this guidebook which I personally write to explain how I trade price action. Okay, I call it the foundation of price action. Okay, so in other words, this guidebook will explain everything about what you need to know about the foundation of price action, how to use price action to trade successfully. By the way, this guidebook I is not for sale. Okay, it is only for people who attend my webinar, and for those of you who actually attended the workshop. Okay. Now, for most people, when they come into the world of trading, they will learn like what's the strategy to trade the market, what's the indicator that I need to buy, I need to use, what's the oscillator I need to master. To me, that are all secondary. Yeah? To me, just learning about strategy, it will not make you a successful trader. Okay. On the contrary, trading is about yourself. Trading is about understanding yourself, understanding how you trade the market, what's the best way that you can utilize your advantage or your what we call your edge in trading. Okay. And the edge in trading starts off by knowing yourself, knowing your enemy, knowing the battle that you're going to fight, and how you can be successful. Okay. And I always like to explain the world of trading, okay, by explaining what's the art of war, Sun Tzu Ping Fa, okay, which is the Chinese version of the warcraft. Okay. By the way, I master the art of war. Okay, I've completed um, the most advanced program in the art of war, and I really understand about how you complement trading with the art of war. Okay, so what has Sun Tzu Ping Fa, the art of war, got to do with trading? Okay, very very important. Trading is a war, and you need to prepare for your weapon. In other words, what is your weapon? Okay, your weapon are your tools that you use to analyze the market. So most people will choose what I call a technical analysis tools. Okay, right. In fact, all mechanical traders focus on using TA tools. But to me, TA2 is just not enough. Okay, right. If you just rely on technical analysis tool, it's just only one third of your weapon that you prepared to fight the war. Okay, so you need fundamental analysis, you need behavioral analysis as well. Okay, so the Sun Tzu part of war is actually telling us a couple of things. One, do you know yourself? Right. In the world of trading, when they say you do know yourself, do you know your trading personality? Right. I would like to assume that many of you do not know your trading personality. Okay. But if you do not know your trading personality, then you really do not know yourself. And if you do not know your trading personality, then how do you know that your the style of trading is appropriate for you? Okay, many people want to day trade, or what we call intraday trading, but intra trading might not be suitable for most of you. It might not be suitable for the personality in you. Okay, so as a result, you might like to trade intraday, but you doesn't have the personality and the attribute to trade the market. Okay, that's what I mean. So the art war tells you got to know yourself. Second, you got to know the market you're trading. Huh? Okay, in the art of war, the market is actually your enemy. What's the market? Do you know the market you're trading? Many people I know lately is trading Bitcoin. Okay, that's the reason I shared with you just now. It's not easy to trade Bitcoin, but if you acquire the skill and the expertise, you can trade Bitcoin. Okay, why? Because you know the market. Okay? So it doesn't mean that Bitcoin is the hottest instrument in town. So therefore you must trade Bitcoin. No, right? Why? You do not know the market you are trading. Okay. And to me, trading is about winning the thousand battles. Okay. So the key thing in trading is you got to plan to trade and you got to trade to win. You got to have a plan how are you going to trade the market, and you got to have the statics or the strategy to trade the market. Many of you, I believe, don't even have a trading plan. Huh? So if you don't have a trading plan, then my question to you is, how can you trade the market well? Okay. And you don't have your trading plan, you don't have your strategy, then how are you going to win the battle? Okay. No? How are you going to achieve your trading edge? Don't talk about profits. Huh? Okay. So now you understand the sensitive part of art of war is so important in trading, right? And by the way, this is really the fundamental or what I call the foundation of trading. Okay, no? So if you come to my workshop, I will assume that okay that you know some of your fundamentals. Okay, and if you really don't have the fundamental, then you got to let me know. Okay, how I can help you to address your personality in your trading style. Okay. Okay, I'm going to spend just a few minutes talking about the hard truth and reality of trading. The hard truth of trading is very simple, okay, which I think most of you will probably know, right? With the internet and the social media, everybody is telling you that you should try to open an account with a broker, okay, and and the broker will give you free education and trade the market. Yeah, it's simple, but it's not easy. Trading is not easy, right? Okay. Trading involves a lot of hard work. It involves a lot of what I call sacrifices. Okay, right? That you must be prepared to sacrifice. Okay, uh, as trader, you always have losses. Okay, now, so you can't run away. Right? Okay. Uh, having losses is a part of trading. So the question here is, if you will always have losses, then the question here is, uh, if you want to survive in trading, so therefore your losses should be small, right? Okay. If your losses is not small, then you might not even survive in trading for after a while. Okay. And that's really the hard fact of life. Okay. In other words, if you continue to make losses, then I don't think you can even sustain your losses over time. Okay. Uh, Trading is a probability game, right? Okay. Uh, and when I say a probability game, there's no such thing as a sure winner. There's no such thing as when you put in a trade, you'll always be profitable, right? So, and the most important thing is trading is not a get rich quick scheme. Okay, so if you expect, okay, uh, to just learn one or two strategy and expect to trade the market well, then I don't think you have the right motivation or the right reason to trade the market, right? Because trading is really a marathon race, right? Trading is really uh, the skill acquisition game. So there's no guarantee for profits, okay, in trading. This is contrary to what you hear or you listen on the internet and the social media. Okay, even the press will tell you that, oh, trading is so easy. Okay, no? You can make a lot of money in trading. That's not true, right? Okay, and finally, there's no holy grail in trading. You know what? If you are looking for a holy grail system, as far as I'm concerned, there's none around. Okay, I've tested many robots. I've tested a lot of algo trading. I still think that 100% algo trading, 100% robotic trading it's not a reality. In other words, when market changes, your robots or your algo need to change. Yeah? And finally, I want to stress trading is a skill. You need to acquire the three skills of trading. And what are the three skills of trading? One, to me, very important, psychology. Okay, now. Okay. Psychology is the most difficult skill that every trader aspire to acquire. Okay. By the way, you can be very successful in having a system. You can master all the best money management, but when it comes to trading, it is a psychology going to fail you. Okay, now, big time. So that's the reason why I always emphasize, okay, the importance of mastering psychology in trading. Okay, so what is psychology? Okay, psychology is basically a study of people in the marketplace. Very, very important. I stress many times, understanding yourself. What sort of trader you are, what sort of motivation you are when it comes to trading. And during the bad time, psychology of yourself will show up. So in other words, you will make a a a huge drawdown. Your personality, your reaction, and your behavior will show up. Okay, so pay attention to this thing called mass psychology, okay, or human behavior. Okay, bye. So let me spend some time sharing you what I think is this thing called mass psychology. Mass psychology works like that. Okay, uh, if somebody say, "Hey, the market is ready to short," and then somebody says, "Yeah, another is a time for me to short the market," and then words get round, so everybody begin to sell the market. Okay, that is what I call Hertz mentality. Okay, now, okay, so Hertz mentality. Okay, another example is when a market is going up, right? Okay, so everybody is saying, "Oh, it's time to buy," and everybody is buying. You know, so that is why the Hertz mentality is so strong in trading. Okay, so as a trader, what do you do when you see that everybody is selling, everybody is buying? Okay, what do you do? As a professional trader, what do you do? Right? Okay, you should understand why these people are selling, why these people are buying, and you know that the market is dominated by hedge funds. The market is dominated by the big boys. So if the traders are all selling, then what does the institutional traders, the hedge fund do? They will reverse. They will reverse the psychology, right? What we call contrarian trading. Okay. So why the market suddenly reverse? Why the market suddenly corrects? It's because of this mass psychology factor in the market. Okay. So the key thing in psychology, as I always emphasize many times, and I'm going to emphasize tonight, understanding your psychologically personality traits. Okay. Now, to me, this is your number one, okay, aspect of understanding yourself. Okay. By the way, I do conduct psychological personality traits. Okay. I only do it like once a year. Okay. Now, I don't do it all the time. Okay. Right. Uh, and you can check with Thomas when is it going to help, the psychological uh, personality traits seminar. Okay. And I'll just explain a bit about, this thing called neuroticism extraversion. Okay. Now, because neuroticism N factor and the E factor really affects your personality. Okay, I'll not go into a detail, but just to explain a bit about why the mental age in trading is so important. Okay, uh, so this is the chart that I use to explain what is neuroticism and extravision. So we plot, okay, the y-axis, okay, and the x-axis, right? Okay, so depending on where you are on the grid, okay, you explain what sort of personality you are. And the most important thing is that the personality dictates the way you should trade the market. What sort of style of trading, what sort of time frame is suitable for you to trade. Okay. So when I explain this table, I don't think many people will understand, but hopefully you understand that why the y-axis, the neuroticism and the extravision is so important. Okay. So know your dimension you belongs. Okay, so for example, you got very high neuroticism, okay, no? And very high extroversion. Then you have what I call unstable extrovert. Okay. On the other hand, you got a very low neuroticism and a very low extroversion. Okay. You can be either be a stable introvert or stable extrovert. Okay. So these are terms that we use to explain your behavior. Okay. So the mental age in trading is so important in my experience. Okay. And the mental age in trading basically means, do you understand your personality traits? Are you able to adapt your personality traits in trading? Are you able to control your emotions so that at the end of the day, you make smarter trading decisions? That's all. Okay, no? So understanding your N, understanding your E is so important in trading. Okay. So let me quote a very famous psychologist, Brett Stamberger. Trading is a performance discipline, and trading performance can be cultivated through a same kind of training activity that generate expertise in such diverse domains as athletics, chess, and performing arts. So, in other words, right, by understanding your psychology, you can actually manage your performance in trading. That's all. Okay, as I said, I do conduct personality tests once a year. Okay, no? uh, and the whole idea of doing the personality test is to understand your personal psychology, what sort of trader you are. Okay. I know that many of you don't understand about this. Okay. No? Uh, and I really can understand why you don't understand this because very few people talk about this. Okay. It's a subject that is very dry. Okay. It's not easy to understand. Okay. But uh, to be very honest with you, this is a very important aspect as a foundation in your trading. It's only a foundation in your trading. So by understanding your personality, you know how to develop your trading plan. Okay. So that to me it's extremely important. Okay. If you don't have a trading plan, then you don't know how to trade. And what goes in a trading plan is your personality that goes in your trading plan. And that's something that very few people understand, right? That one of the item in the trading plan is about yourself. Okay. By the way, for those of you who actually attend my workshop, I make it a point that you must develop your trading plan. Okay. Next, money management is so important. Okay, no? Okay, management is actually talking about application of proper principle in having your proper trade size, following your amount of percentage that you can afford to lose, able to scale in and scale out in the market. Okay. Okay, finally, we talk about trading methodology. Okay. Now, many of you don't understand that trading itself is very complex. It's a very complex process. Why is very complex? Because we are talking about applying money management, applying by psychology, and more important is understanding yourself. So your methodology must reflect how you trade the market, what sort of tools that you apply to trade the market. Okay? So that bring me to the question: what is price action trading? Price action trading is a very simple process. Okay? It is a process, meaning you got to continuously observe market price movement. Why? You want to anticipate future price movement. So in other words, if you know that the market is behaving like that, okay now, right now we are here, okay, right. So we understand that the market is an uptrend. Okay, so the question is, will it continue uptrend or it continue to reverse? Okay now, or it continue to go in the sideways. Okay, that is what we mean by price action trading. So obviously the purpose is transact in the market to make a profit. Okay. So the job of a trader is to understand about where the market is most likely to go next. You know, not forecast, not prediction. Okay, now please, right? Anticipate, right? So in other words, if I tell you that I'm looking for at this market, okay, the market has run down. Suddenly, the market went into a sideways. Okay, now. So the question here is, what is the likely the market will break and go on the upside, or what's the likely the market will break on the downside, right? Okay. So in other words, understanding this is so important. Okay, now. So price action is actually trying to understand what's happening in the past, anticipate what's next, okay, and trade according to the trading plan. Okay, I want to emphasize that your trading plan must have a setup, must have a strategy, and must have a tactic. Okay, now. So many of you confuse with a setup and a strategy. Okay, right. And worst of all, they confuse with strategy and a tactic. They're all different. Okay, so so the whole lot is actually your trading plan. So your trading plan will know, okay, what are the conditions you need to trade, okay, how you want to trade, what sort of price action you need to observe to understand, okay, that this is the right strategy to trade. So as I explained just now, you need to understand about your psychology, okay? And once you understand the psychology, you can determine whether you're mechanical traders or you're discretionary traders. Now, this is very important, okay, right? Because if you don't understand that you are better suited for mechanical traders, and then you trade all the time with discretion. As a result, you find that you make losses. So the only way to verify that is to take your psychological personality test. Okay. And with the result, you're able to understand whether you're more suitable as a mechanical traders or you're more suitable as a discretionary traders. Okay, what is discretionary traders? What is mechanical traders? Mechanical traders are what we call systematic or technical traders. They must follow 100% of trading rules. You know, so there are many mechanical traders, but they don't have trading rules. Okay, so why? Trading rule is not easy to follow. Okay, no? Okay. So are you a mechanical traders? I would say the majority of traders are mechanical traders. Why? Because most of them they use what I call technical indicators and oscillators. Okay, so once you use technical indicator oscillators, then by definition you are mechanical traders. Why? Because you must follow the rules of the oscillators. You must follow the rules of the indicators, right? So you are mechanical traders. On the other hand, there are small group of traders like myself. We are what we call discretionary traders. You know, right? Okay, and most discretionary traders we use price action trading as a methodology. Okay. Okay, I will not talk in details about why you need to learn about price action trading, but sufficient to say that price action represent collective human behavior. Remember, I said mass psychology, right? Human behavior in trading. Yeah, this is where price action is so important because price action represent collective human psychology. So, if I tell you that, if I look at a candlestick like that, you know, now this is a mass psychology, okay? Right. So this is a very powerful candlestick. Okay. So if I look at this candlestick, I say, wow, this is a very powerful candlestick. Therefore, there must be a lot of buyer or sellers. Okay. And what I do, I could understand this behavior. Okay. Price action give you a structure of the market, very important. Price action will help me to reduce the market noise. By the way, if you're trading on a very small time frame, let's say you trade on 1 hour, you know, so most of the time you're actually trading on noise, as compared to trade 4 hours or daily. Okay, right? So there are two type of price action traders. Okay, the first type I call the pure price action trader, which I call naked trading. The second one is what I call not so pure or hybrid price action trading. They use technical indicator oscillators. So which group you belongs? Very, very important. Okay. Okay, let me just spend some time talking about the workshop. Okay. As I explained in the beginning, I've written this book, okay, for the workshop, right? Okay, now this guidebook is essential reading material for the workshop. And basically, what's the objective? The objective very simple: looking at the radical and refreshing approach to trading. Okay, apply price action trading. Okay, okay. Uh, it's a 5 session Most of the time, I use the concepts and the strategy. You got to develop your trading plan, as I mentioned. You got to apply price action setup, develop a strategy, analyze your trading records. Okay, using this book, okay, as a guide. Okay, in my 5 live markets, okay, I'll be sharing about currency, futures, commodity, and stocks. Okay, I will I will explain to you, okay, how to use the 10 chart patterns strategy. I'll explain to you about the 10 candlestick strategy. Okay. So this is a summary of what the workshop comprise. Understanding the market, price action patterns, risk management, psychology, technical and chart patterns, trading with price action. Okay. Okay. So please refer to this like and subscribe page if you are interested. Okay. So let's have a coffee break, and after the coffee break, I will just spend couple of minutes, okay, talking about how you can trade maybe with one strategy. Okay. So now is what, 9:30. Let's be back by 9:45. Okay.
Okay. Those people ask questions, please do type up your questions or the companies you're looking to do or best indexes. Okay. So stand by your companies. Okay. Okay. Stand by your company's list. I think there'll be better questions. Okay, let's take a 15 minutes break. We come back at 9:45. Okay, hear me now. 9:45, okay now. Okay, 9:45 then. Interested, please WhatsApp me a thing. Dr. Fu price of the price is actually limited. Okay, anyway, do me a message. Send me a WhatsApp, whatever it is. Okay, let's take a 15 minutes break. Type out all your questions. We come back at 9:45. Anybody got any questions? Don't be like that, leh. Because Mr. Ko, I don't like people say, oh, Baba at Disneyland. Excuse me. Can you give me more definition? Okay, Thomas, I'm looking to do a 6 month trip on Disneyland. What is your thought, Dr. Fu? That one okay. Just put Baba Disneyland, the what? And your what in-house consultant, is it? Or in-house financial analysis? Anybody got any questions for Dr. Fu regarding the price action trading, technical analysis and things like that? Live market discussion we can do. Dr. Fu,
Yes.
I got Peter asking what is the best time frame to see candle reversal signal. Okay, I can answer him, but my answer will be different from yours. Okay. Okay. Now, Peter is now talking about what's the best time frame because he is now using 4 hours candle. Okay. Okay. Asking. Okay.
You want me to answer now?
Yeah. Answer. One by one first. I got one more answer. One more question. What is the best time frame to see for candle reversal?
Okay, now before we talk about time frame, let's try to understand the foundation of time frame. Now, what is time frame? Time frame is the period that you like to choose to trade the market. Now, as I explained in the beginning, now your time frame must relate to what sort of trader you are, right? And what sort of trader you are relates to what is your psychologically personality traits. Okay, so all these are related. Many people start off by trading on the preferred time frame. If they think that, oh, I can trade the 1 hour, so they trade the 1 hour, and they realize that after trading the 1 hour, uh, it is not a suitable time frame for them. So what they do, they switch to maybe 240 minutes or 4 hours. And after when they trade the 240 minutes, they find that, oh, it's a bit slow, right? And then they say, oh, that's not the right time frame. Then what they do, they switch to a 15-minute time frame. And after when they trade the 15-minute time frame, they say, oh, it's too fast. So what I'm trying to tell you is many people do what I call trial and error on the time frame. And as a result, in the process, they lose a lot of money. So the way I approach time frame is very simple. One, understand what sort of trader you are. Are you a scalper? Are you an intraday trader? Are you a swing trader? Are you a positional trader? And to answer all that means that you got to understand what's your neuroticism level, what's your extra vision level. Okay, if you are very high in extra vision and very high in neuroticism, then I don't think the 1 hour, the 15 minute is suitable for you because you can't handle because your personality don't suit you. Okay, so you should be going into maybe a longer time frame like 4 hours, 8 hours daily charts. Okay, yeah. So fundamentally, you've got to understand number one, what's your personality that you have. Okay, what's your s- y- what's your style of trading, and these two relates to the time frame. Okay, so without knowing your personality, without knowing uh, your psychologically right and your style of trading, is almost impossible. Okay, to tell you exactly whether 1 hour is suitable or 10 hours is suitable or daily chart is suitable. Okay, so you have to go through what I call very objective way to understand about what's the appropriate time frame.
To further expand Dr. Fu answer, okay, what's the best time frame? All time frame are best time frame. What's the best strategy? All strategies are best strategies as long you know what you're doing. So the question is, Peter, based on your trading experience, what is the best time frame from that? Then from there, Thomas, I like to trade 1 hour consistently. I like to do I find that 4 hours I feel are quite comfortable. Then your main time frame will be 4 hours. Either you take Dr. Fu's psychological test, or either that you have traded 6 months, 1 year, 2 years, trade multiple different trade a couple hundred trades, also can. So you got if you based on trading experience is much better than psychological test. But if you had Chinese said no head, no tail, then aside doctor go sign up for Dr. Fu psychological test. It's a 4 hours long a 4 hours long session. That will help you may not be 100% accurate because the psychological test is 100% dependent of you giving the honest answer. So if you go and so called game the answer, you may get bad. You may get what you call get what we call wrong results. Okay, Peter, you understand what I'm saying? Anybody else really want to ask any questions regarding to this one? Okay, then Vincent Koh have okay. No, no, it's best to have the best is what psychological test is just a test. It's only good, Mr. Koh, if you're honest. But human nature, what they are, when you take tests, you tend to second guess the best answer. Okay, okay. And best is what? No, if like you, like you're active trader already. If you're active trader already, you already do your 200, 300 trades already. If after do 300 trades, do not do not know what your character is. That gonna be hard to do. Anyway, let's go back to Vincent question first. Vincent Koh. Vincent Koh is asking you, Dr. Fu, in terms of 3 time frames you mentioned, his question was, do you look at a higher time frame or higher time frame for direction, then use lower time frame to enter? His question said, do you look at higher time frame first to confirm, to give the direction, then use the lower time frame to enter? His questions. How, Dr. Fu?
First of all, you got to understand that I don't trade with one strategy. I don't trade with one method. I trade with multiple methods. Okay, but as illustration, okay, of how I trade as a scalping, as a sniper, right? Okay, if I trade as a sniper and I look at the market, wow, this is a scalping trade, right? Okay, and if I understand the market that scalping is the best method to trade the market, then what I do is very simple. My entry level will be 5 minutes. Okay, my next higher time frame will be 60 minutes, and I'll verify that with a daily chart. If I'm scalping, so that's the 3 time frame that I use as to scalp the trade. 5 minute entry, setup is 60 minutes. The big picture is daily.
Okay. Okay. To follow it right way. So your time frame analysis is 100% depend your duration of trade. I explained to you, somebody want to do swing trading. Okay, so want to do a 60-day swing trade using 5 days, 15-minute candlesticks. You, Vincent, do you think it's a good idea to use 5 day, 15 minutes candlesticks to do a trade that's supposed to last 60 days? Same thing. So Dr. Fu, when do scalping a time, we're looking most probably by my nature, by what I define is what I call intra-hour trade, means in out 1 hour plus minus. That's about it. If you, like our friend Mr. Peter here, want to do a 4 hour trade, if you go and do a 4 hour trade, that means your trade normally will last 12, 18, 24, 36 hours, maybe 2 days or 48 hours. Okay? So which time frame to use will be what? Will be 100% dependent your objective, the duration of that trade. Like if I go and do non-farm payroll trading using M5, M1 minute, hell, I do even don't look at 1 hour or 50 minutes candlesticks. I just look at M5. I don't even look at 1 hour candlesticks. I just look at M5, M1 candlesticks because I'm going scalping. I go in out 5 minutes, 10 minutes, 15 minutes. You send me out. Okay. So end of the day, when you do trading at time, you ask the question is that what is the best? Depend what is objective. Like I said, Dr. Fu, right? Dr. Fu is you say you allow objective, there are a lot of different style of trading. Actually the same thing. I put it simpler. See market, trade market. Strategies come last. Market come first. We the traders, knowledge, skills, capital come second. Strategy come last. Strategy is just tools for us in the us as traders to trade the market. Just remember, we are traders. Strategy are just tools for us to use. What is OCO to be placed before the What is OC? Can you define your OCO?
One cancel all, I think.
No lah. I think you are taking too much advance. We are entering simple lah. When we enter a trade first, then we put a stop loss. In fact, my students know I never put stop loss. What? Even I lose 10,000, 20,000, $30,000, I will never use stop loss. Because very often stop loss how is it? Very often kena triggered. The brokers know you are having stop loss. The big boys also know having stop loss. So we don't have one cancel one order. Okay? Dr. Fu, do you use one cancel one order now? Put stop loss
No,
and
no.
take profit now? No, we don't. We literally see market, show market, hold the mouse. If you, Vincent, you go and find my YouTube video, Thomas saw. Recently, I post a video shared to public how I do a scalping trade in 45 seconds. I have the video recording inside. Okay? Anyway, they're just telling you. As a good trader, enter the trade first. Then you calculate. Do not be lazy. Okay? Most of the time, I tell people, you enter a trade already, put a take profit order in. Okay, Vincent, are you still using option trading or using CFD or shares? Vincent? Are you using sports CFDs? Be careful, ladies and gentlemen. Recently, last month, I have a multi-billion-dollar trader. Okay, one time grandmaster trader for 20 years. Lost $20 billion in 2 days. Okay, don't believe me? Go and find Bloomberg magazine at Tachumaya at Bugis. 2 days, lose $20 billion because this guy trade with 10 times leverage. Okay, Vincent? So be careful. Okay? Nothing wrong. If you like him like that, every year make 100%, then be careful. Okay? Just be careful. Anyway, Vincent, you have my contact detail, correct? If you want a private discussion, how to use option to substitute your CFDs, WhatsApp me. We have a private discussion free. Okay? Vincent saying now. Any more questions for Dr. Fu? I want to help you all to understand better. Anybody got any questions? Anybody? So Dr. Fu psychological class. If there's enough requests, Dr. Fu I may talk to Dr. Fu to do a psychological class. If there's enough requests. Okay. I told Dr. Fu not to do class with 2, 3, 4 people. Okay, it's not I how to put it nicely. I'm not respecting Dr. You. I am not respecting Dr. Fu if I ask Dr. Fu to do a 4-person class. Or I don't think you are not really still I don't think it's nice. Anybody got any questions? Training psychological 4 hours. The class fee should be I think should be $100 plus or minus. I haven't make up my mind. I haven't confirmed yet. So if you interested, drop me a message. If enough got 10 plus, got 10 more than 10 people interested, I will get Dr. Fu. I will talk to Dr. Fu to do the class for you all. Any questions, anybody? For those people who are blah not sure. Price action trading at $888 is too cheap. By right, it's supposed to be the $2,000 to $3,000 class. But I and Dr. Fu is not doing this because we are running as a we are not doing this because we are businessmen or we are professional trainers. If you are professional trainers, you must charge market rates. Anybody any more questions? Vincent, understand so far? Dave, do me a favor. Do not promote other people, please. Thank you very much. Okay? If you think he's good, you think this guy is very good, you can put all your money with him. Okay? You understand me? I always tell people, market is great, market is fair. You think it's good, put all your money inside. None of my students supposed to put all your money inside. Okay? Any questions? regarding price action trading? Anybody, any questions? Please, don't waste Dr. Fu time lah. Now it's 10 o'clock lah. Dr. Fu is spending his valuable time do nothing. Hello? I think I met you one last year, correct? 1 year plus ago, correct? I tell you don't put overseas broker, correct? Okay? Okay? Our Dave here have a misadventure. His Cayman Island broker went missing. Lost X number of dollars. If you ask me which the best broker, I say Singapore-based broker. Because anything happen, you got MAS and SGX to champion you. Now at Cayman Islands, there is no way for you and me for us to do anything. We are not international godfathers, so we don't have lobang we don't have the connections to chase after them. Last call for Dr. Fu questions. If there's no question for Dr. Fu, last call. And those interested in price action one, please drop me a WhatsApp me 9048768. WhatsApp me, say put that Dr. Fu and put your name same time. Okay. And please don't ask me the next class ask. We Dr. Fu and I are not professional trainers. Okay. So we do not every 2 months, 3 months, every 1 month do classes and things like that. We don't do that one. Oh yeah, by the way, if you're interested to attend London German what they call the German London market open also WhatsApp me also. Just WhatsApp me your name and put down there afternoon UK London open. Then once I organize the thing I will send you the link. Okay? Any more questions? If no more questions, wait. Where to buy the 8 candlestick book that matters? Currently now upfront. Okay, it's okay. Peter, Dr. Fu and I have decided several years back not to sell books by itself. If you want to get an 8 candlestick book, and then if I will ask Dr. Fu to teach a class based on the 8 candlestick book. Understand lah? Yes, understand. I do not give books away because we discovered to our horror 20 years ago, 15 years ago, giving books to people, the book written black and white, simple, clear-cut understanding. People see the book, screw up the trading. I don't know how they see what I read. They use read Dr. Fu Trading Naked, what version 1, complain Dr. Fu book is fucked up. Excuse me, what's going on? How my book fucked up? Then I have to get a 1 Dr. Fu student to talk to him. Excuse me, how you trade? Then the guy said, this guy is crazy. Take Dr. Fu book, anyhow trade. Break all Dr. Fu books, break Dr. Fu rules, and now complain Dr. Fu book is useless. Because knowledge is useless. Because you read, you think you understand, do not mean you can execute the method properly. So if there's enough interest for the 8 candlestick book, I may organize a 1-day class for how to trade the 8 candlestick book. It should be $100 plus minus also. Okay, Peter? And by the way, Peter, how do you find Dr. Fu price action trading class? If you find that Dr. Fu seminar find a bit very, very cheap, don't understand, then you better stop. Because Dr. Fu, this class is what we call lower level class. If you go for information, you got feel for it, you understand it, I'm happy for you. Okay, interested, drop me a message. Dr. Fu class is confirmed because Dr. Fu only got about 5 students already. Okay, for this trading price action class, do not ask me when the next class. Okay, anybody have any questions? Thanks, Peter, for asking. If there's no question, before we go further, fast question. How many of you are interested for me to continue with the live US market session? How many of you? If there's no interest, I don't mind. Then we just end the webinar. Yeah, Dave, you don't need lah. You Angie also you don't need because Dave, Angie, my student. Monday night, both of you are registered for the TRT graduate, TRT Thomas Store graduate night. Okay, you both of you registered already. Okay, Dave, remember register, Dave, on Monday night, Okay, okay, done. So besides Devon, who else? Peter, nobody registered lah. Currently, according to my list here, I got about 24 people, 23 people here. Only 2% express interest. The rest not interested. Okay, Mr. Wee and Mr. Ronald, don't say too much. I see you on Monday. Jimmy, I see you on Monday also. HP Hong, Glenn also on Monday. So these are my students actually. Yeah, please, see you on Monday night. I cannot. I could be more forthright. Okay, I tell you what, since okay, let me check first. 1, 2, 3, 4, 5. Okay, well, ladies and gentlemen, why don't we take a 10 minutes break? Okay, we come back around 10:15, 10:20. Then we will do a half an hour session on US market. Okay, and stand by your companies, please. Okay, do not ask exotic option questions. Tonight session be more not focusing on so much on strategies, more focusing on market analysis. Okay, come back in 10:15. No, not 10:15. 10:20. Dr. Fu, thank you very much. Or you want Dr. Fu to stay back? Don't you want to stay back?
No. I
Yeah, Dr. Fu. Dr. Fu, respect him because Dr. Fu, sometimes when I teach, I teach webinar, I feel very tired. Okay, I feel very tired. And Dr. Fu is even older than me. Okay? Okay, thanks, Glenn, Peter, Angie, Chi Kyung, and Philip, Dave are also thanking you for it. Okay, thank you very much, Dr. Fu.
You're
Okay,
welcome. And
okay,
good night,
bye.
everybody. Yeah.
Bye, take care.
Yeah. Bye.
Bye bye. Okay, the rest of you, I see you in 10:20 lah. Okay, 10:20.
No lah. No, enough already. Why?
Okay, what Mr. Koh is doing now is do what called predictive trading, because Mr. Koh here think wow, Disneyland drop drop below 175 6 months low, therefore you should retrace backwards. Okay, this is what I call predictive trading. Normally, I tell people not to do predictive trading. Secondly, that the biggest issue is what the earnings announcement just happened yesterday. So means what? My advice to you, you want to do a bullish trade, look at it after 5 more days, can. Unless you are doing scalping trade. If you are doing scalping trade, I say, oh, go ahead. But you are doing a bullish trade, right? Hey, please, don't do a 1 month trade, on the basis of one candle or 1 day candle, okay? You see, not logical, correct? You are doing a bullish trade on the basis of one candle. Excuse me. I don't think it's a good idea, correct? Dave Chang, how are you? Then my advice to you, if you really want to know, please sign up for my coming shares to options conversion class. Shares to options master class. Okay, you go and learn that one. Okay, now it's very cheap, below $1,000. Okay. Okay, now let me check first. Okay, TDD, but let's go to Dave. Dave, how is the property market? Very good, correct? I heard everybody make good money the last 1 year. Okay, this is interesting. You're looking at a very cheap company, my friend. You're looking at a company that is actually about $11 company. And now that this company is trading at a near 52-week low. Okay, near 52-week low. Let me check, go 3 weeks. Yeah, 52-week low. Okay, it's a recent company. Okay, the one just came out when? Okay, it just came out when? This company just came out when? This company just listed in 2018. So this is not a very good company. Okay. Now I believe that you are doing a bullish trade basing on basing on your information stream. Okay, now that's not a problem. AC, okay, our friend AGC. If you want to do the trade, I believe he's doing bullish trade. Please go and buy options. Please go and buy the longest data option you have now is 15 October, 154 days away. Please go and buy at the money call. Cost you how much? Cost you $1.30. I repeat, cost you $1.30. This trade is about 5 months long trade. Cost you $1.50. I repeat. So please do not go and buy the shares. But the problem, you go and buy the shares, will cost you $11 plus. So between $11 plus $11.39 and $1.30, my personal point of view, as a trader, we want to trade $1.30. Can we make money now? Yes. Why can I make money? Because the 3 month high, the 1 month high, this is daily candle. The 1 month high happens to be $14. So if you are bullish, believe you are bullish, go and buy the straight call for $1.30 for 5 months. You got chance to make money? Yes, got chance to money. You're bullish because the first high, the first 1 month high, 30 days high, happens to be at $14. Understand, Dave? Anybody got question? Dave, most probably want to buy shares, but at $11.39, you might as well go and buy options for $1.30 better. Treat the $1.30 as stop loss money. Take it as $1.30 option money as a stop loss money. Then you can hold for 5 months. If the if you buy a 5 months at the money call and after 2 months, after 5 months, still cannot retrace back to test $14 level, that means your original projection is wrong. Anyway, if you wrong so much, it cost you only $1.30 only. Which one better? Spend $11.39 or do a $1.30 trade? Okay? Any understand logic behind? By right, if you based on technical analysis, I say if you go based on technical analysis, my advice to you to wait for 2 more days. See whether the next 2 days continue the high now. But your basis, I think I know you because you're my personal friend. I know you for 10 over years. So I know your character. So I know that you are thinking, basing on what you're understanding fundamentals. Our friend Dave here is basing on fundamentals. It's not basing on technicals. If you are basing on technical analysis, gentlemen, you have to wait for another three or four more candles. Dave is basing on technicals, okay? Like Mr. Cole here based on his belief. Hit the thing low, must bounce back. Please wait lah. Thank you very much. These are not on the basis of one candle lah. Anybody got any questions regarding AGC? Okay. Next candidate is TDD. Huh? Actually, TDD. Oh, sorry. TTD. Sorry, not. TDD now going nowhere. I repeat, now not going nowhere. See lah, about 5 days ago, have an earnings announcement. Okay, the earnings announcement is bad news. Okay, the bad news based on chart pattern, the immediate low is at 1590 level. After earnings hit and bounce, come out earnings, crash the thing down, break the thing now. Then after that, the next candle break a new low. Then after that, the last three candles here, bullish, bearish head, what we call this type of candle is called what we call no head, no tail, no head, no tail. So as a directional trader, technically speaking, we are not going to trade this company unless you're fundamental. If you are fundamental, let's say Thomas, I want to do a 6 month trade or 1 year trade. Cause no head, no tail. You can see the last three candle where you can see the bullish candle is what? Hello, break a low, reverse back. Now the last three candles is what I call all what you call in ultra day trading term is called inside candles. Means that indecision. It's indecision. Yeah, bit it. Let me check something first. Let me see okay, what thing we do is TDT EK. This is interesting. Oh, wow, yeah. This is interesting. Okay, wait, I need to take out this. This is, by the way, the sell indicators here is my proprietary indicators. So, the my is what? It's $59. This is considered aggressive but conservative farming trades. Don't ask the reason. You need $500 to do this trade. That's a simple one. You do this trade. Remember to close it 5 days before, close it 3 days before expiry. Okay. Angie, Glenn. Yes, no head, no tail. But then, if you notice, can you not do what we call a multi-directional trade? Means that no head, no tail trade. Means that if the market go up from 515 go up to 550, you make money. If from 550 drop down to 480, you also make money. Angie? Okay? You know roughly gonna do it, okay? Okay, this I just show you what the opportunity. Yes, it's a no head, no tail trade. But then we got strategy to trade no head, no tail. This trade maximum profit is 250, maximum loss is 250, 100% return. Worst case, how much you do? Worst case, the thing drop to zero or thing go to $1,000 or $10,000 is $250 maximum loss. It's considered a fixed fee trade. Anybody got any questions? Okay, any more companies? Next company? Anybody got any companies? Okay, NVO. Beside Anna, who else? Shirley? Ted, Young, Peter, no, sorry, John, J, HP. Okay, let's look at Facebook. Facebook is perpetual evergreen. In fact, in this market, you don't need scan or all. You can build a list of 10, 5, 10, 15, 20 companies, and you can quite comfortably trade this one. For day to day, you can quite comfortably trade these 15 companies. Facebook. Okay, Facebook now, interesting. Okay, after the earnings, okay, earnings happened to be last month. Okay, after the 29 earnings shoot up to 333, then afterwards, then people, then big boys slowly take profit, drop down to 300, 300 level, which happened to be what we call the pre-earnings level. Now the next 2 days, after that, the last 2 days is going up by $12. Okay, fine. If you want to do a bullish trade, Jay, what's the time frame? Your budget? Bullish or bearish? What do you mean by daily? You want to do intraday trading? Or you want to do intraday scalping? Okay. In this case, my advice to you, we will not do this company. Why? Let me show you why we will not do this company. Look at this company. Price action value, how much? This price action value happens to be only about $2.50. The price movement for this candle is not big enough to justify the $300 over dollars company. So you can't do scalping trade, is right. And the candles are, yes, it's also called trading bullish, but unfortunately, to me, it's not worth time effort. For me to do this company, this candle, the first candle must be at least $6. Because if the candle only $3, do you think how much money can you make from a $3 candle move? Let's say now I do ultra trading. First up breakout rule. I enter at 311. Hello, I make $1. I'm sorry, I make 80 cents only. Do you think it's worth my time effort to risk $311 to make $1? Okay? So if you tell me, Jay, for Facebook as a intraday scalping trade, this is not at this moment in time, based on current price we see here now, is a bad trade. Anybody got any more questions for this one? If you tell me, Thomas, I want to do I think I hit the bottom, hit the 300 hit the 300 support level and bounce. If you want to do this trade, intra fortnight at least. Bullish trade for intra fortnight means that do this trade for next Friday night. Okay, next Friday night, we should for the 21st of May or 28th of May expiry. I'm not talking about shares. Ladies and gentlemen, unless you got $500,000 account size, do not go and buy Facebook shares to do swing trading. If you tell me you buy a Facebook share, like me, buy 1,000 shares and do half an hour scalping, 2 hours scalping, make $5 or $3, I agree with you. But if you want to do this trade, my advice to you, if you really know how to do, go and do this trade. What is a budget per trade? How much? What is your stop loss money? I'm not interested in your capital. In this case, I'm interested in your stop loss money. How much you prepare to lose for this swing trade for a few days? Because my strategy will be 100% based on what? Based on your stop loss. Remember, to me, strategy, when Dr. Fu and I trade, his trade method is the same thing. We don't trade based on our strategy there. The strategy we use is based on the market opportunities, then based on our skill set, our capital exposure. Then we structure the strategy to suit all three there. For you to do a $300 trade, simple. Go and buy a vertical spread, and the money vertical spread costs you $1, $1.07. Okay, but this trade need you to close the trade you need to close the trade before expiry. If you are more conservative, if you are more KS, I suggest you do 28 of February, 28 of May will be better. The profitability, if you are right, got time for you to be, got more time for you to be right. 7 days versus 14 days being right. 14 days have higher chance. But the return, your maximum profit is 132, your maximum loss is 118. Okay lah. So let me check my student. Glenn, are you here? Anna, will you take this trade? The budget for this trade is $250 because you buy 315, you short 317.50. 315 minus 370.50 is $250. This is what we call what trade. You notice when I do trading at time, this is your worst case maximum loss. How much you lose? 118. But when you come for trading purpose, in my trading plan, in my master plan of trading, this is considered $250 trade. Jay, any more questions? Whether you do 7 days or you do 14 days. Personally, for you, I think how good, I don't know what's the trading experience like. If a seasoned trader trading options, then the 14th of May will be good. If you are not so sure, not so certain, then 28th of May will be better. Okay? Anybody got any other questions? And do me a favor, if you don't have a 6-figure account size, do not use shares to scalp. For this company, don't use shares to scalp. Why? Hey, Fred, it's $310, $312, $300 company. So 100 share is $30,000. I don't care what leverage you have. Okay? Okay, interesting company. Excellent. I like it. Why? Okay. Broke a 1-year high about 4 days ago. Broke a 1-year high about 4 days ago. Okay, after breaking a 1-year high, after break the 1-year high when 11. Since then, the last 3 days is making new high. So now we are doing what we call a breakout trade. So most probably we are looking to what? Let me check the options first. Bad news, ladies and gentlemen, bad news. Mr. Anna, you know the problem now? You cannot do scalping trade. You cannot, so you must do what? Intra-month trading. Okay, please don't do 7 days. One thing good about intra-month trading, options very cheap. $1 how much? $1.55. Delta number, probability numbers, implied volatility numbers, all good. Okay? So if you want to do it, Anna, buy a straight call. Please don't go and do a vertical spread. Thank you very much. For 35 days, buy the straight call, buy the straight put. Anna, understand what I'm saying now? Okay, yeah. By the way, Dave, understand what I'm saying now, Dave? Anybody else? Why buy a straight call? Thomas, why don't do 7 days? 7 days is cheaper. But then 7 days implied this one must be making you consistent new high. But then you and I know after making new high so much there is a reasonable probability it will go a technical retracement before continue the making a new high. So in the world of trading, it's best 7 days may not be enough time for you to do it. Because today alone, today the price movement is very small. Today the price movement is only up by 30 cents. Yesterday is up by $1.20. The day before, move a price action value or move of $1. So we know this company you may not able to move so much. Okay? Anybody, any questions? Now, Thomas, if you're bearish, no problem. If you're bearish, go and buy at the money call. Go and buy at money put. By the way, let's say back, I just show you some sample. Is it the best trade? My student will know. Okay, but buy at the money call, buy at the money put is the most basic entry parameters. Of course, if you want to optimize this trade, you need like other 3 different parameters. But for sake of learning tonight, just focus at the money call and the money puts. This is enough for time being. NG NG, honor. Okay. Do you think a strangle honor? Okay, think about it. Okay. Of course, I don't want to talk about that. Okay, you go figure out. Okay, Angie, don't much. Anna, you say Anna. But Dave, if you want to do paper trading, depend on your mood If you are bullish, then you go and buy If you're bearish, buy the call If you're bearish, you go and buy the put. Do demo trading first. Okay, strangle, don't touch my MOI first. Okay. Okay, because why different level of students. Okay, different level of students. Okay, both Anna and Angie happen to be my tutorial student. Okay, my advanced tutorial class, what we call thinking trader class. Okay. Okay, any more companies? Anybody got any questions? Okay. Ted, any questions? John? Shirley? Young, you never ask question, where are you? Gibson? Edward? Edward. Who is Ed? Ed is a new name, eh? Devon, any companies will do. You're not super beginner. You're talking about crude oil. You're talking about crude oil, orange juice, and platinum. Definitely not beginner, okay? See, ladies and gentlemen, when people say certain things, yeah, we listen. But the question you ask, tell us a lot about his background. Anybody got any other companies? Okay lah. Why every time I offer this to public, and every time it's my students that make use of this DDS. Okay. Something is not right. Why the market? Why is so slow? Good. Okay. Okay, DDS. DDS by nature. Okay, it's not DDS. You cannot do intra short-term trading. Means tactical trading. You can't do intra-week, you can't do it overnight. DDS if you want to do you must do what? You must do intra-month trading. Okay? Next, chart patterns. Okay, interesting. Good. But Angie, please wait 5 days. Thank you very much. Can see now. In the first place, ladies and gentlemen, unless you are doing scalping, okay? If you're not doing scalping, then scalping can use CFDs and shares also, okay? If then you want to do a swing trade, my advice to you, ladies and gentlemen, look carefully. The previous high is where? It's here. So now for you to do a bullish trade, please kindly wait 5 days. Okay, 5 days after today, next week. See whether you can break the 133 level or 132 level. Okay? Once you're talking about 133, 123 level, 33 level is okay. Is then we think consider doing. Volume is subjective. Look carefully. Is the volume high? Yes. Today volume good now? Yes. Can see now. Today volume okay. If I put a mouse here today, okay, is what? Is 300. Wait, check first. Is 300 and wait, I check. Is about 400,000 now. Is it? I check first. Yes, it's about 400,000. 420,000. But look at what's the average volume. The average volume is $200,000 per day. $200,000 per day. Now today is 1 hour plus 1 hour and 50 minutes after market open is way above average daily volume. So yes, this one, yes, the price action movement, a big ultra move about from 103 to 128, about 25 or $24 is backed by higher volume. Yes, correct. Normal context, we're not interested, but we just check volume just in case, just to double confirm. If you have a 20% move, okay, do they move 23%? If you have a 23% move and the volume is below average, means what's average? Simple. You take your mouse here, go to drop a part here. What's the average volume? The average volume, if you base on the last 45 days, average volume, most of the time, is around 200,000, around 200,000 level here. Around there, 200,000 higher. So if the today volume is $50,000, 50,000 shares only, then you start to worry. But one look at the candle, you can see based on the last 40 days candles, this is the second highest volume there in the last 30 days or 40 days. Okay lah. Yes, confirm. Snapshot confirm. Okay. Anybody got any question regarding DDS? So, but if we do this trade now, I suggest wait for 3-4 days. Why? When you do a normal 30 days or 40 days or 80 days trade, you want to base it on normal market conditions. Now, yesterday after earnings announcement, the thing shoot up. Please let to have several days for the price to settle down. After any company that shoot up by 23% in a single day is considered abnormal. But your 30 days, 60 days, 90 days swing trading is a normal trading strategies. So be careful when you enter abnormal trading movement. This company moved 23%, 12% is considered abnormal. Please use abnormal strategies. Okay, please use abnormal strategies. But you want to do a 60-day trade, please do 60-day trade. Can please go and wait 10 more days after this to confirm that it's making bullish, making new high or making new low. Anybody got any question regarding that? That. Any questions? Anybody? Oh, by the way, why don't we take those options? Why don't we take those options? Edward, you are my Edward or somebody Edward? Okay, before you go further, look at trade. Another thing is trade. Before we go further, before you run into trading, stop. Look at a BR spread. 670, 1030. The put is 990, 1240. Ladies and gentlemen, if you see like that, don't bother. For beginners, don't trade. For my veteran, for veteran trader, not a problem. Okay, my old students know how to adjust, optimize the option pricing to queue for the best price. But beginners, please don't trade, because you enter, you buy at 1030, you sell on the spot. What means by what? What mean by 1030 and 640? You buy 1030 on the spot, market order 1030, then you sell back on the spot, market order. You only get back 670 there. Okay, 670. Okay, so this one, be careful. Like my older student, my tutorial student they will know what to do. They know how to calculate. But this one, to be fair, if you're going to do this trade, prepare to hold at least 3 months at least. So if you want to do this trade, most probably at the queue, maybe August time frame, to be fair. Okay, now anyway, don't mind. Next is what? 127. Dave, this trade you cannot do. Okay, I repeat. This trade cannot do because don't have weekly options. Okay, you cannot afford to go and spend $10. $10 is $1,000, and I have not discussed your budget there. Let's be honest, if you can afford $1,000 per trade, why don't you split the $1,000 risk you take? Why don't you split to 4 trades of $250? Which one better? 1 trade of 1,000, 4 trades, or 2 trades of 500, or 4 trades of $250? Lose less, risk less, higher. Best thing, Instead, $1,000 learn one time, $1,000 learn 4 times. Okay, next, let's go to our friend Edward, VTN. I don't know why you are. This is interesting. You are got these exotic companies. Okay, for this VTM, excuse me, the Edward VTNR, correct? You are trading penny shares. Okay, for you, I give my opinion. First thing first, you can buy shares at $1.64. Okay, if you go and buy options for 15 October, you can see here now. You see now, the nearest one the nearest option available and the money option. You can see now, the thing drop until what? Drop until you can see now. There is no in the money for the call side. Okay, Edward. So you want to do a jackpot trade, Edward? Okay, Q for 40 cents, 45 cents. Okay, put a few contracts in. Ladies and gentlemen, my students, this is a jackpot trade. Anybody interested in jackpot trading now? 5 months long jackpot trade, 40 cents or 45 cents. But this one, Lim, Dave, not for you. Sorry. Because I know my student, every one of my student have sit down with me one-to-one private coaching session or interview session with me already. So I tell you, Dave, don't touch. This is jackpot because high chance of losing. Why? 250, correct? Option price is about make it 50 cents. Look at the chart pattern. Wait. Stop. This one is very better. Can you see here now? Why is the lowest low here? Is 114. Can you see that? Let's say now you go and buy shares. Okay, listen to me carefully. Edward, you go and buy shares. You buy shares at $1.64 to buy the shares. First, as a good trader, you definitely put stop loss, correct? Okay? You say well. So you put stop loss, correct? Your stop loss must be below must be around 110 level. Why? Because if you go based on chart pattern, your 6 months low is at 112. The 6 month low is at 112. Okay, 1 month, 2 months, 3 months, 4 months. Okay, 6 month low is how much? It's actually at $1.96 level here. 3 months low happen to be 112. Actually, what? Okay, 6 months low happen to be 1,111. So if you go and buy a trade, buy 10,000 shares at us $1.63. If you base on conventional trading stop loss, you buy it. I buy to open to 163. In the event the thing drop down to 110 I get cut loss. Okay, that's logical, correct? So you buy 163, your cut loss at 110. Your stop loss is how much? You prepare to lose 53 cents. In this case, may I advise you, since you prepare to lose 53 cents, ladies and gentlemen, why don't you take the 53 cents, go and buy an option better. Go buy option. Let's go buy market order. 50 cents only. In fact, you go and buy an option trade. Your option trade is slightly cheaper than your stop loss. Okay? No. Dave, don't ask this question. This one not suit for you. For you, Dave, you want to trade, you trade popular companies. You trade company got weakness. For you, Dave, anything you see got money options, you don't trade. Okay, Dave? Edward, you understand what I'm saying, Edward? Edward can afford to lose trades. So you understand logic behind now. So you know that you do a bullish trade, your stop loss must be reflected. Your stop loss is on 53 cents. Based on what? Based on not here, not SPX. Based on chart pattern. See last 2 days breakout here, correct? So maybe you want to if you want to KS a bit wait for one more day Now today is Friday, correct? Now today is Friday night, correct? Maybe you wait until next Monday is it bullish or bearish? Okay. I'll repeat again. If you want to do please wait for a few days to confirm. Unless if you based on chart patterns and price action but if you based on belief system, I think based on my understanding of this energy company, I think it will go up. That's different. So based on fundamentals, based on technicals, based on price action, please choose one. Thank you very much. So most probably I think you're based on fundamentals. Can? So you, as usual, mind your risk. You have the budget, calculate your thing. And please do me a favor, don't go and buy one contract. For 50 cents, heck, go and buy 5, 10 contracts. Okay? Or any more companies? Next company. This, my ladies and gentlemen, this is what I do in a typical live learning session. But ladies and gentlemen, you notice I never give you specific details. I give you general details. If you attend a real live practical session as a paying student, as one of my students or follower supporters, you will get precise detail why I say it's 40 cents or 45 cents. Why good, why not bad. Okay, for tonight, because it's public session, I tell you enough for you to trade, but I can't give the precise detail what they're not now. Correct, must be fair, correct, Edward. After Edward, okay, very generous, sponsor 5 figures to TRT Academy for us to do what we call live teaching class and things like that. Okay? Don, are you here tonight? By the way, Edward, are you coming tomorrow? I think got space for one more. Okay? Anyway, let's end this one. Okay, any more? Next company. You got 5 more minutes or 4 more minutes. One more company, please. From public, thank you, if possible. Wait, is Dave Edward. No, VRC Edward. Dave, NG, no. Public members, one last company, please. Yeah. Now the lockdown caused a lot of negative feeling in the Facebook group for what I also don't know. Now, ladies and gentlemen, let me teach you a few tricks. It's actually for my seniors, for my tutorial students. You can always go and join other traders group. Okay, like example here, let me show you one to you. You can do here like option traders, right? Just click option trader. Okay, we come with option to 10 out. This one is what we call a sore loser. Okay, why? Because in 20 trades you do he lose 50% in a few minutes. That means what? Okay, I don't comment too much. Okay, synthetic option strategies also don't want to talk about it. It's advanced. IRA cash stop. You can see here now. This is the company called sell to open Visa put. Okay, sell V 235 put May 7 collect $2. This guy is. Do you think what to do now? Edward, do you think what to sell put now? For this guy sell collect $224. $224. NG, Dave, don't follow. This one is very dangerous. Dave, Edward, how? You think it's a good trade? Why don't do? Why people do? Why you don't say no good? Return over risk. When you sell a naked put of $235, that means that you're prepared to buy the shares at $235. But the money you collected is how much money? You only collect $2.24. Do you think it's worth the risk now? You see now? Then I read, roll the trade, close the trade, cut loss, roll the trade for $1.27. Then this week, 1 hour ago, roll a trade for another week for 27 cents. You okay lah? My student, you do that, I literally will scold you. Why? Collect $3. Don't say $3. Last week, roll over the trade, means that repair the trade for $1.27. But the risk is how much? The risk is 200. And thanks, NG, $233,500. You collect how much? You collect $200. Then last week collect $127. This week collect $27. But what's the risk? $235,000. Okay, no, sorry, $23,000. You think lah? let's say $20,000. Even at $10,000 level, you think you want to do it like NG? Okay, or Mr. Ko. Mr. Ko is not my student. Okay, but he attended enough. You think you want to do it? Collect $200 at for reach $10,000. Course not. I said, what? I might as well go and follow Sifu, go and sell our credit spread better. Definitely they collect 50%, 100% return. It's not too dangerous. It's not your objective. Your objective is to collect income, achieve income. But then, as a trader, we must do what? We must be prepared. Worst case scenario. But then, it's not justifiable for the $23,000. You know how much trades you do? Okay, let me take one. Let me take one company, recent company. Okay, we take one recent company. One, Preta. This is a nice company. If you want to do this trade, this company is what we call using spyware, cyber security. This trade, prepare her for 6 months to 1 year. Okay. Then another company called which I like to share with you. Okay, it's a company called Snow. Snowflake. Snowflake now see after earnings drop come out. So good news. Snowflake ladies and gentlemen. Okay, we check the last earnings when last earnings happened to be 3rd of March. So okay, be careful, ladies and gentlemen. Okay, now you can see hit the bottom correct. Okay, hit the bottom correct. Hit the bottom here correct. So if I were you as a trader, I will explain to you NG and a few other people already. Okay, now anyway, this cannot do a trade. But Snow, if you are very confident in this company, you can do a 6 months long trade. Another company is called what? Coin. Okay, for tactical trading. Okay, good question. Tactical trading, correct? Please wait 2 more days. So today is Friday, correct? Why don't you wait Monday or Tuesday night enter? See the Monday and Tuesday night enter, is it making new high? Because let's say now you enter at 210 okay? You enter slow enter 210 Hey, don't mind, because from 210, after enter 200, the next baseline support level is at 240, 245. Okay, this company is a new company. Okay, you see it's like $200. You see, 200 company. How new company? Just listed when? Just listed on 14th of April. So technically, the pattern you see here is just only 2 months only. Okay, just 2 months only. But this one is a volatile company, to be fair. So next, look at option chain. Let's look for 35 days. Look carefully. Look at the price: $20.80, $21.90. You see now, so it's $1 apart. Here is what 80 cents apart. So this type bit the buy price apart is quite tight. Okay, so this trade at the moment in time, my advice to you, unless you know what you're doing, like Edward and Arnold, don't touch this company. The reason why option is very expensive. And secondly, look carefully here. How many candles here? Today is 14. The first day of trading was 14. So 14th of April to 14th of June. So the candlesticks here is how many rounds see? The candlestick what you're seeing here is what? You are seeing a company that is going, Chinese said, technically is bear. Technically is bearish. Why bearish? You can see what's the lowest low? The low is what? The lowest low is 250. Yesterday, testing the 250 level and fail. Okay. Today, break a new high, become bullish. But now, the market force the price down. Now it's bearish. Now it's minus $1. Okay. Anybody any questions? And so you can sign for any one of these options independent group. So you can see from here alone, you can see what other people do. Your job is to analyze, like sell to open V. By the way, this happens. It's not a newbie trader. This happens to be a moderator. You just imagine that he's prepared to his style is like that. Nothing wrong. For all we know, his account size is $5 million. But if your account size is 10, 15, $20,000, 5, 10,000, 5, 10, $15,000, 20,000. This is a good idea to put $2,000. Okay, thanks, Angie, for reminding me. See lah, my student remind me not to be too passionate. Okay, for all my students, Monday night graduate, Monday night TRT Traders Night. So do register for Monday night. Okay. For my students, those who want to come in, WhatsApp me tomorrow. If got space, you come in tomorrow. Tomorrow is my last so-called small group, ultra small group sharing sessions with my students. Unfortunately, for at least 1 month at least, because after Sunday, technically I can do it, but for obvious reason, I don't think it's a good idea. Currently, all the schools and kindergarten and tuition centers have no announcement regarding this confinement period. But I'm prepared to I will not TRT will be closed for TRT physically will be closed for 1 month. You can WhatsApp me or contact me through phone, wherever it is. Okay. Okay. Still okay. Contact me by phone, wherever it is. So don't walk in, please, because chances I will not be there. Okay, and Mr. Koh, I expect you to join when I send up the shares to options masterclass. I expect you to sign up. After all, it's very cheap, only it's below $1,000. Okay, take care, ladies and gentlemen. Okay, my students, Monday graduate night, please stand by. Those who got questions or need some private questions, WhatsApp me tomorrow. See if got any space for you tomorrow now. If not, ladies and gentlemen, it's tomorrow class is limited to 8% only. Okay, if not, ladies and gentlemen, thank you very much. I will close this webinar for tonight.